All right. Good evening, everyone. I want to welcome Baron and Kajan this evening. They're from iConnect Mortgages, and they're here to talk to us about the stress test, the upcoming stress test. I know we have a lot of questions for them, probably, hopefully, because I know our clients have been asking us a lot about it. So I will give you guys the floor. Welcome.
Perfect. Thank you for having us. So we are going to do a small presentation if you can bring it up, Christine.
Sure.
And then we will probably do a Q&A after that.
No worries. Okay. Okay.
Perfect. So my name is Baron Kananantham. I'm one of the partners at iConnect, and Kajan is also a partner with us. So we've been in this business for quite some time. We are former bankers, and now we've been in the mortgage broker world almost 5 years. iConnect has been established a little over 5 years. And we've been doing business with a lot of lenders, including the major banks, trust companies, monoline lenders, and the private lenders. In 2020, Kajan was a top 32 broker in the country. So we come with a lot of experience, and we're just going to have a quick presentation. It wouldn't take more than 15 minutes. Then we are going to open up to questions, answers for your team.
Sure.
If you can go to the next slide over.
No worries.
So why choose a mortgage broker? So everyone's thing is why you had to go to a mortgage broker when you can get the financing done through a major banks or who you bank with. As a mortgage broker, what we try to say is a one-stop solution. We have access to multiple lenders, so you can have a high-value client who's looking for a very low rate, or you could have a client who's looking for an option in terms of maybe they may not financing through the bank, they need to work with the alternate lender. We have a solution. We are a one-stop solution. So how we try to say is like when you go to the bank and when you get the client, then you need to go and start multiple options. So when a client comes to us, we start with see if we can qualify a client through the bank. Then we go to alternate lenders and we go to private lenders. So you don't need to run around to find a solution for your client. It's a one-stop solution. And also, we have access to lenders have much lower rates than banks do. For an example, we have a lender who is actually offering 0.99 on a variable rate on a high ratio mortgage. You will be walking to any one of the major banks. They're not going to talk about those things. So we are a solution for your high value clients or a clients who's looking for multiple options as well.
And also just to add on that too, like when, a lot of you guys probably would deal with a mortgage specialist and, with the other banks. And a lot of times, like when we do a pre-approval for a lot of our realtors, we actually run the numbers. So what we do is we actually pull their credit, make sure the incomes are all lined up, and we would make sure the deal will fit before you guys start showing the house for them. Because one of the disappointing things would be, you guys get the offer accepted and we can't qualify them for a mortgage. So most of the time when we do a pre-approval and we give a rubber stamp on it, that means that deal will close. And we haven't so far had any issues on not closing a deal. So we're really proud of that. And at the same time, when we run the deal, it's going to work for sure. So if we can work on a deal, we would tell you ahead of time, hey, listen, you know what, we can't work on this deal. So you might have to find a different solution. But most of the time, we'll find a solution for them.
Very good.
Again, next slide over. So I'd like to briefly touch about monoline lenders. The monoline lenders are lenders. They don't do alternate lending. They only do A-side lending, and they are a little bit different than the banks. They're a little bit different than the banks because they have a different criteria of how they source the funds and how the penalty comes in. So if it's a first-time home buyer who wants to get an approval or they want to take a 5-year fix, we don't prefer to take them to the bank. For example, the mortgages get broken every 3.2 years. So as a realtor, if you want to sell a client another home or they want to expand the home or they want to move to a different location, we are seeing it can cost you thousands of penalties. I'm sure you guys are seeing clients who's dealing with penalties that are costing thousands of dollars. So the reason we prefer and recommend monoline lenders for the clients is their penalties will be significantly less, almost 1/3 of what the penalty could be at the bank. So this is a solution for our clients who are looking for fixed rate mortgage, but they may not sure they may want to be with a property for next 5 years, or it could be an alternate solution than going to the bank in case if they had to sell it and they need to move to a different location. It will save them thousands of dollars in penalties. So if you can go to the next slide over, Christine.
Also, just to elaborate on the monoline lenders, the way I present it to my clients is it's almost like you're shopping for car insurance. So it's like, you got TD offering car insurance, you got RBC, you got all these big banks offering you car insurance, but you also got the small guys, Johnson & Johnson, Intact Insurance. End of the day, the end product is the same. They still offer you much lower rate, and at the same time, they still offer you the coverage. Same thing with monoline lenders. They're smaller, they don't have overhead costs, so they don't have a bank in every corner. The underwriting is identical, and the other thing is the qualifying is identical to the bank. But the good thing about it is the penalty, what Varun had said, it's most of the time much lower, like 1/3 of what you would pay in a bank. So Varun is going to talk to you guys about the rest.
If you look at the example here, like if you take a $500,000 mortgage at a bank, CIBC, the penalty could be about $12,000. If you go to the next slide over, it's at $3,600. It's significant different than significant changes, and especially right now we are seeing penalties of thousands of dollars. So that's one of the reasons we recommend monoline lenders for the clients. And keep in mind, these monoline lenders only source the mortgages through mortgage brokers. You cannot go to them directly, and you cannot get them anywhere else. So they only source the mortgages through mortgage brokers. The next slide over, please.
And also some of the other lenders that we work with is credit unions. So we do work with Duca, Alterna Savings, Meridian, also Quathra lending as well, Quathra Bank credit union as well. One of the benefits of having a credit union is that they are not governed by the stress test. So we can actually qualify them on the actual rate. So we do have another lender that would qualify them on the alternative side, as well as on the A side on the actual rate that's being offered rather than the stress test. So that's another additional benefit. So on an average, that client can qualify, what would you say, Varun, $100,000 or
$120,000, I think, $120,000 over.
$120,000 over that actual qualifying stress test.
Okay.
So Varun's going to talk to you guys about the new and non-resident.
Yeah, so we work with the lenders, the banks. We still have an option for new to Canada and also non-resident as well. So those options are still available. So if you're having a client who's new to Canada, do not have an established credit, or they don't have an established work history, we have a solution, but it's kind of limited. So if the client is not working, you may need a 35% down as a stated income program to be qualified for the new immigrants. And if someone's in Canada, they actually have a contract, have a full-time employment, they can qualify for a mortgage as little as 5% down, even though they do not have an established credit. So there are many options for new immigrants and also for non-resident as well. So non-resident will be someone who is actually living abroad. Like, for example, they could be living in Dubai, and they could be a professional, they could be an engineer, or they could be a doctor, but they want to buy a second home they want to buy a home for their children to go to school. So we can actually qualify them using the foreign income. I'll give an example. I had a client who's a doctor in Dubai. He wants to put the kids to university. He bought a $2.5 million property, but we can actually use the income that he earns in Dubai to qualify here. So there's a lot of option for a non-residents as well. And in some instance, you may not be able to get the traditional lending, but it could be a private lending. But these clients, they just want to get the footprint on the Canadian housing market, and they are even open for it. So if you have a situation like that, run it by Kajin or myself, and they are open for the options. Like, as long as they understand this is a short-term solution to get into the housing market, they are open for these solutions as well. Next slide over, please.
So self-employed. So when it comes to self-employed, the way we have quite a bit of lenders that do qualify clients on self-employed. So the way that we usually try to qualify clients is a non-traditional way. So when it's non-traditional, one would be using their bank statement. So for example, we get a lot of people, truck drivers, for example, they work so many long hours. They have, as long as they have a registered business, some of them will accept 3 months, 6 months, 1 or 2 years as well. As long as they have bank statement confirming the monthly deposit, we're able to build a case. So for example, a truck driver can be getting $10,000 monthly deposit into the bank account. I'm able to average that out over the 1 year and use $120,000 income. And my rationale, I'm able to get that deal done. So sometimes, tax saving wise, that client might be declaring only $30,000 on net income. However, we're able to work on gross income. Same thing for IT professions and even realtors. We're able to get their deal done using their actual gross income rather than the net income. Now, the thing is, when you go to these non-traditional lenders, there's going to be some costs associated with it. So there is a lender fee and there will be a broker fee. And, to be honest, the clients are saving on taxes. Like these clients are supposed to be paying sometimes, 30, 40% in taxes. They're avoiding it by, writing off a bunch of stuff and declaring less taxes. So unfortunately, the way they have to qualify, it's on the alternative side. And at the same time, let's say you do come across this client that has this business registered, we're definitely able to make it work. And at the same time, we're not able to pre-approve them, but we're able to put the case together for you. So if you have a client that, for example, wants to go for a house and, is interested in a house, we're able to pre-qualify them as well using this program.
And you want to comment about the rates on these?
Yeah, sorry, I had a little brain freeze there. The rate on that is, so right now, before COVID, the rates were, $499, for example. Now the same rate, you can get $278. That's on a 1 year or 2 years. So it's a very attractive rate. Remember, before COVID, the banks at the major banks were offering 329, 369. Now you're getting alternative channel and you're able to get the similar rate or actually much lower rate right now. So sometimes, if the client really wants to get into that house, it makes more sense for them to kind of, in today's market, the houses goes up, 5 to 7% a year. So they can kind of like, get into the market. Yes, they'll pay a slightly higher rate for 1 year or 2 years. And then afterwards, we can refinance them back and put them back into the A bank, right? It all depends on the clients, how they take it and how we can structure the deal.
And we also, we don't have a slide here, but we also specialize in rental properties, like clients who's looking to buy investment properties. We deal with the clients who's buying 10, 11, 12 properties. There are many options. Banks actually put a block on, they cannot purchase more than 6, 7, 8 properties, but the B lenders, the alternate lenders, they do not have a cap on how many properties you can own, unlike banks. So these investors, they're savvy. They understand it's going to cost them a little bit more money, but for them, it's all about building the real estate wealth. They're okay to pay a little bit of high interest rate as long as they can find a solution, or they don't need to pay cash for this property. So when it comes to investment properties, we have multiple options as well. Also, in addition to that, we also deal with a client who has a bruised credit, went through a separation and bankruptcy. They're trying to reestablish a credit, but they have a 20% down. We can help those clients as well. So that's pretty much in a nutshell from us. Now we can probably open up to the questions and answers.
You guys have any questions?
Minimum for the first time buyer for RRSP, when they can use the first time buyer RRSP. So minimum how many years or how many months they can leave the money deposit and withdraw the RRSP, not RRSP loan, like a first time home buyer loan, they can use the RRSP money. So how many months minimum can leave the money in the bank?
Did you hear that?
Can you want to comment on that?
Yeah, so they recently bumped it up. It's $35,000 per individual. And so the money, so let's say you deposit it today, the money needs to be in the account for 90 days before you can withdraw as a first-time home buyer. And the payment structure for that, you have 15 years to pay that back. So every year, let's say you're buying RSP at $5,000, a small portion of it would have to go back to repayment of the RSP.
So thank you. And when they started, say tomorrow they do, okay, 30 days or 6 months, leave it to money. So tomorrow or today they start, okay, they bought a house. And then when they started paying, I know 15 years they can pay, one right away they have to start paying, or there's 5 years later they can start paying.
It's whenever you're paying your taxes. So when you do your taxes is when you start repaying that. So the following year, you'll make that, I don't know, the $35,000 divided by 15 years. So $2,333 you would have to pay on a yearly basis. So when you say pay, you just add it to your income, or you can buy more RSP.
You know, guys got any questions?
How many years is one considered a new immigrant?
Did you hear that?
Sorry, I didn't get that.
How many years is one considered a new immigrant?
5 years.
5 years?
5 years.
Yeah.
Okay, good to know.
And I hear that some bank, the government help for the low income people who first time buyer. I don't know exactly. Please find out which one's right ones. The low income people or first time buyer. They help 50,000 or something. Is it true?
Yeah, it is. I'll let them explain. So they were saying like low income people, the government helping, you know, the government's boosting. There for
I think he's referring to the first time home buyers incentive program.
exactly.
So there was a slight changes made recently for metropolitan areas such as Greater Vancouver, Greater Toronto, and Greater Victoria. You can qualify up to 4.5 times of your salary, maximum of $150,000 household income. So that's being said that 150 times 4.5, your purchase price cannot exceed $675,000.
That might be a little bit tough because I don't know what you can, unless it's a condo, right? In this area right now market.
Quite a bit compared to what they had it before. I think it was 480 before.
And also there's a lot of people thinking that individuals thinking that first time home buyer means it's your first time buying a house. So that's to withdraw the money from the bank for RSP reasons, right? That's what they can classify. There's real two benefits the way I see first time home buyer. One of them would be to take money out from your RSP. You got to be a first time home buyer there, and to get a land transfer credit. Okay. To buy a house with 5% down or even 10, 15% down, you don't need to be a first time home buyer. I have clients that bought a house today with 10% down. 2 years later, they'll buy another house with 5% down. You can still qualify for 5% down, 10% down, even on your third property or even on a cottage property, right? As long as your income will service that debt. So let's like a lot of people confuse first time home buyer as in like, it's only one time you can buy with 5% down. No, you can buy with as many times as you qualify. But again, it's ideally used for first time home buyer, but you can even qualify for second time or third time, as long as there's a right rationale for it.
Okay.
What is the minimum requirement for foreigners?
What's the minimum requirement for foreigners for down payment?
35% minimum down payment.
35%.
And also they need to have a 12 months principal and interest payment as a fallback assets as well.
As a fallback. Okay. Good to know. Good to know. Anybody online have a question there for these guys about anything?
Any question about the stress test?
Any question about the stress test, guys? That's what we're all stressed about, right? So when are they looking for it to come into play, I guess?
It came in play, right?
Yeah, it's already in effort since June 1st.
In effect since June 1st. Okay. And what exactly changed, I guess, we can say from before? We'll go over that in case people don't know.
Then we'll comment on that.
Right?
Okay, you want me to?
Yeah.
So pretty much what happens is qualifying rate all this time was 4.79. Now the qualifying rate has been bumped up to 5.25.
Okay.
So what that means is technically what that means is reducing your buying power by 4 to 5%. So it's not a significantly change, but it is a change for someone who's on the borderline. But if you're working with the 20% down, the stress test is now going to make a huge impact on your qualification, because most of the time we should be able to get an exception from the lenders. That's number one. And number two, we have many lenders who do not do stress tests. As Kajan mentioned earlier, credit unions. So what happens is credit unions are actually regulated by provincial government, by FISRA, and banks are regulated by OSFI. So they have to follow the federal regulatory changes, but the credit unions do not have to. We also have some lenders on the alternate space. Actually, they do not charge a lender fee, or they do not charge, we don't charge a broker fee. They actually qualify on a contract rate of 2.89. So if you think 2.89 is a higher rate on an alternate side, it is not on a 5-year fix. It's a really good rate. It's not significantly different than a bank rate. And this will help you to qualify almost 120,000 more than what you can traditionally get qualified. So there are solutions to work around the stress test, having these alternate lenders.
Okay.
And I also want to comment on one thing. So right now, there's a lot of things we are seeing in the East End or all over the place. We can actually use a rental income to be qualified. So the rents has gone up. So you could have a client who may be on the borderline, but they may want to bump up the price a little bit more, but they want to qualify, but they have a basement apartment. So some lenders, they want the basement to be retrofit. And we have some lenders that we work with, they do not have the basement to be retrofit, but they want the basement to be self-contained. That what that means is the basement has to have a separate entrance, washroom, and a kitchen. So as long as you have a separate entrance, washroom, and a kitchen, we can use a rental income to qualify. That will make an impact on how much you can qualify.
How much of the rental income do they take?
Some lenders take 80%, some lenders take 50%.
To know.
Even if that one is not the legal basement?
It doesn't have to be a legal basement.
I'm sorry?
It do not have to be a legal basement, but however, they do need to have a separate entrance, washroom, and a kitchen.
Oh, okay.
And a bedroom.
Self-contained.
Comment on that, Kajan, how they do appraisal and stuff for the basement?
Sorry?
You can comment on if you want about how they do appraisals to qualify the rental income.
Oh yeah, most of the time, as long as like what Baron said, as long as there's like a basement with a legal entrance. So it doesn't, I mean, the legality doesn't matter, but it just needs to make sure it has a bedroom, washroom, kitchen, and self-contained unit. But the legality is not an issue at all. Most of the time, you know, I know with like bidding wars and, you know, the market that we're in right now, sometimes, you know, a realtor needs the comfort that, hey, would that value come in? So most of the time when we do a deal, we say, hey, listen, like I can guarantee the mortgage, but the value is something that it comes with the specialty of the realtor. They're going to do the analysis and they're going to make sure the value is in place. But we do use few lenders that they use a system called Emily on the back end where it would automatically auto approve. So one of our lenders, Scotiabank, that we send quite a bit of business to, if we send a deal in anything under 1.25 million purchase price, we have the authority to see if it would auto appraise the property. So most of the time, if you have a COF or if you know, if your client has paid a little bit more, you know, sometimes it'll pass through the system based on other comparables. So you don't have to actually physically visit and have an appraisal in place. So that's the other perks that we have as well. Because most banks, they want an appraisal, but in our system, we're able to bypass that sometimes. And that has helped a lot of realtors in the past as well, as well as a lot of clients as well.
So when you work with these lenders, actually, we do have a direct contact with these lenders. So with the Scotiabank, we are one of the top 100 brokers in the country. So we have a one-on-one underwriting. Same thing with TD Bank, same thing with HSBC. All the lenders we deal with, the amount of business we do, we have a one-on-one relationship with the lenders. So sometimes if you need a help taking a look at the application before you submit or putting an offer, we can have a conversation with the underwriters and say you are safe to make a firm deal. And we understand these deals, these days you cannot make a conditional upon financing, everything needs to be a firm deal. If you're running a situation like that, if you are kind of 50-50, don't know how to handle it, give us a call. Even if you're not doing the mortgage, give us a call. We are here to educate you.
I know you guys touched on cottages. You were saying you could do it with such a low percent down. I always thought with recreational properties, the banks looked at it a little harder.
As long as it's a 4-season cottage,
Okay.
you should be able, as long as you can qualify, you should be able to do it with 5% down.
Okay.
But the income has to be supported.
Yeah. Okay. Do you guys have any other questions here?
One more question.
Yeah, for sure. Bhaskaran, what's up?
That the 50,000 government help for the low income people.
Yeah.
Or no, first time buyer, I think, no?
Mm-hmm.
So in case they need a co-signer, and the co-signer maybe second, he had already house, so it's not count like first time buyer. It's still those other person.
So if you have one person qualifying for the first time home buyer with the government helping, if his if he needs a co-signer, his co-signer isn't a first time home buyer, does that affect him? I think, right? That's your question?
It's a great question. I'm not 100% sure for the answer, but my guess is
have to
probably
be first-time home buyer.
qualified. Both of you had to be a first-time home buyer.
Yeah.
But I can look into that for you.
Yeah.
Agriculture land.
You said, you think what?
Agriculture land.
Agriculture line?
Land.
Land, sorry, agriculture land, agricultural land.
So most of the time with agriculture, we still do those deals, but it won't be a bank deal. It'll be like a private lender or institutional lender that will have to source the funds from. Right? Most of the banks, they want to land with the house on there. Like we did a deal in up north, 100-acre land. We were able to get an exception that was never made in one of the Scotia Bank. We're able to get that exception and close that deal. On exception basis, they'll look as long as there's a house on there.
Mhm.
Right? If it's just a land,
There has to
most
be some
likely
sort of
be-
structure on it.
Yeah, yeah.
I think, Kejan, you've been working with a private lender who specializes in the land, like on agriculture land, right? From Vancouver?
Yeah, from Vancouver. I do have some contacts on there, but like I said, that's almost like a private.
Mhm.
What's the interest?
What's the interest rate?
You're looking at 799 starting.
You got some size here.
Normal rate.
Normal rate, if there's a structure on it?
It's bank rate. At that time, if you're going through an institutional lender like a bank or something, that'll be a bank rate. But like I said, when it comes to an acreage, it is gonna, it's that they look at it a little bit different because remember, when they do an appraisal for the bank, most banks only use 10 acres. So that could be an issue that we'll come across, like 10 acres, the max they'll use with the house. And some of them will use the outbuilding and some of them won't. So that it really depends, case by case.
We also deal with private mortgages, first mortgage or second mortgage as well. So we only deal with the institutional private lenders. Can you want to comment about what are the options we have for the first and second mortgages?
Yeah, so we deal, like with Warren said, we deal with a lot of institutional lenders. They're all regulated. So it's not like John Smith lending the money and telling you, hey, listen, I need the money the next day or next week, right? So we try not to get into that. So we only lend with institutional money. So most of the time when we do a private, we have a couple of ways of doing it. A lot of times when clients, we get clients that buy pre-construction, we're able to go based on appraised value. So let's say a client bought a house 5 years ago, a condo or a new build. They bought it for 788, 799. Now it's worth $1 million. And they only put 10% down. We're able to close that deal with appraised value without the client putting in more money. Mind you, the rate might be slightly higher. A rate on that first mortgage, you're looking probably at 799. Looking at a rate of 2 to 3% fees. At the same time, we do have second mortgages that we're able to arrange as well for clients up to 85%, sometimes even 90%, but those rates starts from anywhere from 9.99. But again, the difference is you're dealing with institutional lender. You're not dealing with somebody that's just lending the money.
Right. My favorite question, what about mortgage plus improvements? Do you guys do that sort of thing?
Yeah, most lenders do that. Mortgage plus improvement. Varun, you want to comment on that?
Yeah, most of the lenders do that, and the insurers do that as well. But it's a lengthy process. Like you had to come up with the money.
So you have to pay up front and then they release the money. That's the way most.
So what happens is they do the approval based on the before and after. So let's say I've done a deal just recently where the client wanted to do a brand new kitchen, washroom, and all that stuff. So client bought it for 400,000. They qualified for 450. So we did the deal based on 450 insure guideline. And now they send that $50,000 to the trust account to the client, to the lawyer.
Mhm.
Now the client has to find a contractor. There's a lot of special contractors that would finish a job with their own money, and then they would remit the receipt to the lawyer, and the lawyer will release the funds. Depending on the lender to lender, some lenders would want an appraisal just to confirm the work has been done.
Mhm.
Some appraisals don't really care about, some lenders don't care about it. So but on a high level, that's how it works. So they'll do it based on the appraised with the improvement value, and then they'll work backwards.
Very good, very good.
And whatever second mortgage lender fee or broker fee, and sometimes I get a news that they say no lender fee, no broker fee, no appraisal.
For second mortgages, you hear that?
Sometimes
Oh. He says, what about second mortgage lender fees? What are they like? And he's heard some radio ads where they say no lender fees.
Yeah, but is there a broker fee? So this is why I tell most of my clients, right? It's like you take the cake and you can cut it different ways, right? You can 1% on a lender fee is same thing as getting a 9.9 on an interest rate. You're paying that somewhere. So you can get a second mortgage of 15%. That would cover the lender fee, broker fee, and the interest of 9%, right? So it all depends what kind of presentation, how you're gonna present it to the client end of the day. Like I have some lenders, they'd be like, hey, listen, if you want to keep it at 7%, we're gonna have to, that's like some clients want to see visual 7%, but end of the day, the fees they're paying, it's same thing as having a higher interest rate. So it all depends. Do they want a front-end charge or the charge afterwards on a monthly basis?
Mhm.
Right? So when you hear all these things on radios and stuff, sometimes it's all about presentation.
Mhm.
We're getting those calls.
Just to kind of generate those calls, right?
Mhm.
But there's a catch. The client's gonna pay somewhere.
Yeah.
Nobody's gonna lend free money at that rate, right?
And the specific lender that we deal with is based out of Vancouver. They actually do not charge a renewal fee. Their renewal fee is only $200.
Yeah.
But that's significant, right? For someone who cannot get out of the second mortgage or paying off the second mortgage or paying off the private, most of the lenders we've seen, they pay the renewal fee again. That could cost you another 1 to 2 to 3% even, right? So this is here is only $200 renewal fee. So we don't want to put the client into the situation. What about if they cannot get out of it? What they're going to do? So that's why we are very particular what kind of private lenders we deal with.
Because the main thing is exit strategy, right? If you don't have an exit strategy for the client, the lender will just keep on piling more and more fees. So that's why it's very important what Baron said. We want to make sure we're working with reputable people. So that way, end of the day, you're referred the client to us. We want to make sure that your name is not tarnished and our name is not tarnished. We want to make sure that we do the right thing for the clients.
Sure.
And I also want to comment on how we work. So Kaja and I, we pretty much take care of the client. We structure the deal. We are the main point of contact. We have 2 credit assistants. They're always available on the phone or email. So if I am in a meeting or if Kajan is in a meeting, as a realtor, as a client, you will never go between the business hours without a point of contact. You will always have someone there to answer your emails or answer your client's emails or a phone calls or a text message, because the communication is the key in this business. So we completely understand how important to have the communication is the key, and we streamline the process. There's always someone there to answer the question. You will never go more than probably 30 minutes without answering a phone call or getting an update. It could be 7 o'clock in the night, putting an offer, just need a text. Sometimes I step in for Kajan's client and Kajan step in for my clients. We have young children at home, so sometimes we may not be available, but one of us there to guide you through the process whenever you needed it.
Good to know.
Sorry, I said, I hear the news, but it's still other question, same thing came from news, and they said normally 1 year for second mortgage, and you have to pay only interest. Sometime now they say it because I don't know, they say now 3 years or something without renewal, like continue, you can pay interest and plus principal. Is it true?
For
Normally 1 year second mortgage, and then you have to renewal. And then
Yeah.
pay renewal fee sometimes not, depend on the lender.
yeah,
And now I hear the news
that you're locked in for 2 or 3 years.
3 years, and then
Yeah.
you can pay no penalty anytime, and then you can pay plus interest plus principal also. Is it true?
I don't know. You're talking about second mortgages?
No, somebody, yeah. But,
Yeah.
so I asked them,
Yeah.
is it possible?
Is it possible that you're paying principal and interest?
Yeah, and then 3 year time or something.
On a
Normally-
3 year
normally
term.
Every year you have second mortgage, you have to. that's
Normally, I
money.
guess I see that more in private lending, but yeah, normally you get in for a year, you're paying interest only, but he's been hearing if you lock in for 2 or 3 years, you can pay principal and interest.
Yeah, and open mortgage, you can pay it off at any time.
Yeah, an open mortgage you can pay off at any time.
Mortgage, you can pay any time, but there's penalty.
Yeah.
3 months
But this
penalty.
one, there's no penalty.
Yeah, no, this is say you can pay 3 years time, and then you can pay plus interest.
Yeah,
No headache, you pay off That's right. Otherwise, we have to
Headache-free second mortgage.
Yeah. Okay,
Yeah.
No, because lots of people, bank approved this time and they
Yeah.
need 100,000.
Mhm.
Where they go, when we knew, then
Yeah.
easy, somebody.
Exactly.
But I hear the time they say no renewal fee. No
On
lender
which
fee.
radio? The Tamil radio? You
Yeah,
said?
Tamil
Tamil radio?
Yeah. No, that's why, because.
Yeah, no, for
same
sure.
you also in case, yeah, that's why.
Yeah. Yeah.
But just to comment on that though, like if a client is going to second mortgage, there's clearly an affordability issue, right? So if they want to pay a principal, I might as well recommend them keep the principal aside, just do the interest only, and then do a lump sum whenever you want, because it's a prepayment option is open anyways, right? That's what I would do personally. But I mean, again, doing these mortgages, you can structure it different ways on the private sector. It's like an art. You can say, hey, listen, I'm going to amortize it over 3 years and make you pay interest and principal, but the rate doesn't change, right? So if you're giving him 6%, it's still going to be 6%. It's just going to be more principals added on top of it, right? So again, it's just the way it's presentation end of the day.
But if the client is looking to have a private mortgage for more than 1 year, they do have a problem of taking a mortgage. They shouldn't be taking a mortgage.
Yeah.
Should be last resort, I guess, right?
That's
So,
a lot.
For example, my cousin bought a house there here,
yeah.
and back say, I appraisal this one, so he doesn't have money, So
Yeah, short on the appraisal.
Kind of problem came,
For sure.
that's the
Happens
problem.
all the time. That's why
Yeah.
second mortgages,
But
private
you don't mind
mortgages.
to pay principal,
Mhm.
but you can pay interest.
Mhm.
But I know it's high interest, 9% we pay.
Yeah,
99.
that's crazy.
Sometimes
Yeah,
6%, but depend on the situation,
for sure, for sure.
And a lot of time when it comes down to qualifying, right? We're, we think outside the box, see how we can make them help too, right? Sometimes, they have daughter or son or somebody, cousin or somebody that lives in the household that can help them. We can just add them onto the deal, ownership wise, give them 99% or 1%, have them on the deal temporarily for a year or two. And then once the equity is built up again, or the financials has changed, we can always do a refinance and remove that person off the deal, right? So there's a different ways of structuring sometimes as well.
Most of the people, they don't want it sometimes, they don't leave their name, they can't go buy a house, or then sometimes they got a problem.
Yeah, for
That's
sure.
another problem,
Yeah.
So
We can also use, we can also use a contributory income. So if you have a mother or grandmother or someone living in the house, we can actually use a contributory income. They don't need to be a guarantor, they don't need to be a co-applicant.
Okay.
And also that comes in handy, right? So we can use a contributory income. So they do not need to be on the mortgage application, or they don't need to be a guarantor.
Okay.
Mind you, that would be on the alternative side, right, Vern?
Yeah, on our trade, but not through the major banks.
But it's still better than getting a private mortgage. The rate's much cheaper.
For sure, yeah.
if the private mortgage people, they give the first mortgage as a private, how much interest rate?
First mortgage is a private?
Sometimes they're doing, second mortgage, they will say, okay, you come like a first mortgage also, pay off the bank, and they will pay interest rate, low interest rate. So how much low interest rate if it's going?
I don't think a private bill would be lower than the bank, though, you think?
Yeah, I know.
So you're saying someone would get a
not-
private to pay
but
off
not
their bank?
8.99 or something. I say
Yeah.
low, how much they get? 3%, 4%.
For a private mortgage
Yeah.
as a first?
Yeah, first mortgage.
How much would an interest rate be for a private?
I've seen like a promo rate 599. But
599?
that's for like a
Yeah.
top-notch private client.
Yeah,
Yeah.
okay.
I've seen 599. Mind you, there could be back-end fees, right? It could be like 2.5% lender fee. All the stuff could be on there, right? But
Right.
like advertising wise, 599. I've seen some lenders send it to me.
Very good, very good. Everybody quiet there online. Anybody got any questions online? Everybody good? So yeah, I mean, I'll share this video with the rest of the office as well, and I'll share your contact information so anybody can reach out to you guys if they need anything or if they have any more questions they think of after. We're all done here, though.
We will see you soon.
We will see you soon, they said here.
Thank you so much for your time, Christine.
Thank you so much for having us today.
Thank
and
you
have a
so
wonderful
much
evening.
for all the information. Nice seeing you again.
Thank you.
Yes, for sure. Have a good evening and come back again, maybe with another topic for us.
You got it.
Have a good
Okay.
one. Bye now.
Thank you so much.
Thank you.
Thanks, Christine. Thanks.
Thank
Okay,
you.
thank you.
Bye-bye.
Bye-bye.